Welcome to the Profitable Farmer Podcast, where it's all about increasing the profitability of your farm by working smarter, not harder.
G'day and welcome once again to Profitable Farmer. Jeremy here. In my last podcast, I interviewed financial specialist in agribusiness, David Charge, and one of the comments he made has really resonated with me when I probed him on this whole problem that I believe we have across farming in Australia around financial literacy. He made a comment when I pushed him on it that, and I mean this completely respectfully, but the one-man band plumber or butcher or hairdresser, in his opinion, often has far more financial literacy and far more financial acumen than most farming families in this country. And so it's with that in mind that I want to go deeper on this issue, because I do believe that it's a problem for many farming families. And a lot of what we're going to talk about today is simply a range of critical business management skills that farming families and people coming into the industry just are not taught and do not have. So it's with that in mind that I've asked co-founder of Farm Owners Academy, Greg Johnson, to join me today to have a really full and in-depth conversation around this dilemma that I call financial illiteracy or lack of financial acumen. So Greg, thank you for joining us.
You're welcome, Jeremy, and hi to everybody that's listening.
Thanks, Greg. So just to speak to that point, if we could first, Greg, what in your travels over your last 35 plus years in agriculture, and as you arrive into the kitchen tables and the offices of farming families, over 100 farm businesses that you've worked with, what's your assessment of how many have a really strong ability to manage their financials versus the other?
Yes, it's actually quite a few more than that now in terms of farm businesses that I've dealt with over my time, Jeremy. But and right across Australia and also some overseas people as well. Look, and what I've found is that probably the majority of people don't really have a great understanding of business, of the language of business, of the finances, the financial language surrounding business, and it's common. That language is common to all businesses, whether it's a farming business or a plumber, or a hairdresser, or any other business. It's the language of business is the same, and having an understanding of that language and being comfortable with that language. And what it means to the business is vital, because what I've seen over many years of working with farms and also many years of owning businesses myself and working with other people who own businesses is that you don't necessarily have to be the best technical farmer, the best technical vet, the best technical hairdresser to run a successful and profitable business. A large proportion of success is due to the business skill and the financial skill and financial literacy of the owners. And so it's an incredibly important part of business ownership, and something that I think is really sadly lacking, unfortunately, in the Australian farming landscape, and probably hasn't been improved. I mean, we've moved away from the shoebox accounting process that used to happen before the introduction of GST in 2000. We've moved away from that, and people have been forced to keep their books reconciled on a quarterly basis, generally, for the majority of farm producers on a quarterly basis. So at least they've got that that's been forced upon them now. But still, I think a lot of people don't really understand what's happening in the background of their computerized cash management programs that they use, or if they're handing off all of that work to their accountant or whatever, they don't really understand what's going on and what it means to the business, and how having an understanding of that language and what underpins it, how that gives you so much more control and makes the decision-making process in your business so much better than if you don't have that knowledge and that background.
Thanks, Greg. And absolutely, I appreciate that you've worked with many more than 100. I guess I was looking at percentages, and of 100 typical farmers that you drive up a driveway, what percentage would you rate as strong in this topic?
Well, of the people that I've dealt with, what I can tell you is that all of the people who I've dealt with that are highly profitable and run what I consider to be very good farming businesses, all of them have a good understanding of their financials and the language of business. So that's one key indicator. But I would suggest that probably less than 10% of the people that I deal with initially really have a good handle on the finances of their business.
Greg, I remember at the one of our recent conferences with over 220 farming families in the room, you asked three questions. One around, and I'm probably going to paraphrase, maybe you can recall the questions that you asked. How many of you have a budget, regularly compare actuals to budget, and analyse numbers on at least a quarterly basis? And my assessment of that was that absolutely less than 10% of the room were confidently able to answer all those three questions positively.
Yes, and we've repeated that on a number of occasions now. Those exact same questions. We've probably over 600 or 700 farms, I suppose, farmers and farm business owners, and yeah, in general terms, by the time you get to the third question, most people have a budget because they generally they're forced to have a budget because of their the requirements of their finances and so forth. A far lower percentage actually update that budget and use it on a monthly basis to help with decision making. So you take their budget and actually make it into a cash flow statement, and very, very, very few actually take that cash flow budget then statement and then create profit and loss statements and balance sheets to actually inform their decision making. So you're right, Jeremy. It's definitely less than 10% in that audience.
Absolutely. And so I guess, where do we learn this stuff, Greg? Like, if we think about people who are either new to the industry and coming through, they might have come out of ag college or not. And also, I guess, the more experienced farming family or farm business owner with 20 or 30 years experience under their belt, where do we learn this stuff?
Well, it's actually not difficult to learn it, and resources are available. And although I'm not sure that they've been packaged up particularly well, and that's one of the reasons why I sat down and set about actually designing and creating a course for an online course to train farmers in the language of business. And I think we'll talk a bit more about that down the track. But I mean, I'm no different to any of you. I'm not an accountant by training. I'm a vet by training. That's my technical expertise is in veterinary medicine. I was trained as a technician, like so many other people who get into business ownership. They generally come into the ownership or the business as a technician, and the business is just something that they have to do. That the managing of the business is something they have to do to be able to fulfill what they're wanting to do in life, the technical part of what they're wanting to do in life. And so many of the people that I see go into farming or that own farming businesses have come into those businesses as technicians, as technical farmers, and the business part is just kind of something that they often begrudgingly have to do, and so they don't pay a lot of attention to it, and that because I don't think they really understand the true importance of the business skill in the success of a business over the longer term. And so I think once you understand that, how important it actually is, and as I said to you before, I think it's actually more important than being a good technical farmer. Once you understand the importance of it, then you'll take the necessary steps to go out and find the training that you need. And it's very simple. It's not a difficult process. And in fact, I think that with the advent of modern computing programs, that our skill, our business management skill, and particularly our skill at cash flow statements and the generation of profit and loss and balance sheets has actually declined because a lot of the things that we used to do manually, that we had to do manually to keep our books and so forth, are now done by our computerized cash management programs, and they happen behind the scenes. We don't really even see what's going on. So I think it's actually led to even more dumbing down of the whole financial control and management process within businesses. But basically, there are plenty of opportunities for people to go out and learn these skills, but you have to. It's like learning anything. You have to go out and prioritize it and focus on it. And it is a language, and the more you practice your language, the better you get. It's the same as the English language. The more the more you speak it, the more fluent you get in understanding that language. And financial literacy and financial language is no different.
There's a couple of interesting points I'd like to make, if I could, Greg. That I actually think there are quite a few business owners and farming business owners out there who actually abdicate the responsibility of this. They think that the money's made when they're in the paddock, and they either get their partner or a bookkeeper or their accountant to do the heavy lifting around this, and actually have very little active responsibility in the administration and then the management and then the analysis of their performance. What would you say to those farm owners who have that mindset, perhaps, that the money's made in the paddock?
Yes, so I don't disagree that you have to perform in the paddock to generate your income in the first place. But then it's how much of that income that you keep, how much of that money do you keep, that actually determines the success of the business in the longer term. And that's where financial management and financial skill is so important. And so if you don't have a good understanding of what's going on right now in your business from a financial perspective, the chances of making good financial decisions in whatever circumstances you find yourself in, whatever climate and market circumstances you find yourself in, are much lower than if you have a good handle on what the current position of the business is going forward, and also what the longer term requirements of the business are for cash and for wealth generation and so forth. So I think it's really important. Now, I don't think that you need necessarily to be spending your time putting making the cash entries into your cash book. I don't think you necessarily need to do that, but you need to understand the principles behind what's going on, and understand the summary sheets that are generated or that can be generated from your cash management programs, your cash flow statement, your profit and loss statement, and your balance sheets. You have to understand what they mean and understand how they can inform decision making, so that you can actually use all of those three statements, and we'll talk about them a little bit later on. Use those three statements to really make much better decisions.
What can go wrong for not having really strong ability in this area, Greg?
Well, I think the likely scenario is that financial decisions are made, or decisions are made that really can put the property into a significant peril from a debt perspective or from a recurrent liability perspective, or advice can be taken from well-meaning people who don't necessarily understand the full picture of the business and what's going on, and what the long-term requirements of the owners are, so that the wrong decisions might be made. So, I think that there are a number of different possible scenarios that lead the business down the track of lower profitability and an inability at higher risk, and an inability to be able to necessarily deliver what the owners might want it to deliver in the longer term in terms of wealth generation and so forth.
Thank you. Just as an aside, and just to set a bit of context to a comment you made before about that the language of farming, or the language of business, is finance. I've been lucky enough to learn financial literacy from a bloke from Texas called Keith Cunningham, and he's a bit of a superstar. And as a 70-year-old Texan, he tells a pretty entertaining story about when he first came to Australia, arrived jet-lagged into a hotel room, and turned on the TV, and there was green fields and blokes standing there in white outfits. And he stood there watching this game on TV for about 90 minutes. And as he watched this game, there were maidens, there were wickets, there was a wicket keeper, there was a silly mid-on, someone fielded in cover, there was a fine leg, there were slips, someone got out leg before wicket, someone got bowled out for a maiden, there were wrong-uns, googlies, flippers, And as a Texan who'd never seen the game of cricket before, he stood there completely bewildered by this game that goes for 5 days. So what I'm predicting is that most of our listeners will have understood everything that I just said and absolutely understands the language of cricket. Imagine being a Texan and running on for an Australian cricket game, having no idea about the language of cricket. You'd turn up on the field, you might be able to participate, but you're going to look like an idiot. And so on the flip side, what Keith Cunningham talks about when he teaches financial literacy is that when we use the frames return on assets, return on equity, current ratio, liquidity ratio, resilience score, productivity ratio, machinery efficiency ratio, common sizing, break even, profit margins versus gross margins. There's a whole language to business and finance that most of us just don't understand that language. And I think it's a really useful example that Keith Cunningham uses is that, and what he says quite strongly, Greg, is that if you don't know the language of the game that you're playing, you're going to look like an idiot and you're going to underperform. And I think that using that cricket example for our listeners, I think is a really useful one. What would you say as to the importance of knowing this skill as the language? I just want you to speak to your point, if you could, about the language of business being finance.
Yeah, look, it's a great analogy that you just gave, Hutch, and certainly, that is the case. You should be able to go to a meeting with your accountant or with your financial advisor, and you should know more about your business from a financial perspective than your accountant and your financial advisor. Because if you don't, then you run the risk of them giving you advice and driving you in a direction or steering you in a direction that you don't necessarily want to go. That they might, for all the right reasons, might make suggestions for directions for you to follow or things for you to do that actually don't align with what your business you want out of your business down the track. That doesn't align with the current situation. That doesn't align with how you see the business. And so it's so important that that you have that understanding of your business, that deep understanding of your business from a financial perspective, so that you can go into a meeting with your accountant and if he says something that just doesn't quite ring true, that you can pull him up on that, and that that's in fact the case. Because if you don't have that position, if you're not in that position, then the most likely scenario is that at some time or multiple times you will make financial decisions that can actually be quite risky and detrimental to the business in the longer term, and that is a major problem.
For me, that's probably the litmus test, is if you can have a really rigorous and sophisticated debate with your accountant and people like your accountant and hold your own on this topic, then that is probably some feedback that you're on the right track on this journey. Greg, just to move into the three dials in the cockpit, if you like, that our farming business owners have to know in order to have real control over the financials of their business. Would you mind just speaking to, I guess, the three key reports that you believe need to be priority?
Yeah, so the three statements that really I think everybody needs to know and be very comfortable with generating and interpreting are these three statements here. The first is the cash flow budget, which really tells you all about the current liquidity of the business. And all businesses survive or die on the basis of their liquidity. Businesses that fall over because of a lack of liquidity. And sure, the owners might have made decisions that's put the business into an untenable position. So in other words, they might have incurred debt that they can't service. But the thing that actually stops the business in the long run is lack of liquidity. It's lack of cash. And so the cash flow statement is such an important statement to really understand what the current state of the business is. And so, and when we talk about a cash flow statement, it's a statement that captures all of the cash inflows and the cash outflows for the business on a daily, weekly, monthly basis. And so it's taking that cash flow budget that you might have done for the bank or whoever, and it's actually putting in your actual performance, your actual inflows and your actual outflows on, probably for a farming business, a monthly basis, to really give you a great understanding of what the current cash position of the business is. Because, one of the things I often hear from farmers is that, well, look, we work in a very unpredictable environment. And it's true. I mean, there are two major parts of farming that you have no control over. You have no control over the weather, and you have no control over the prices. But pretty well after that, you've got control over everything else. And one of the things that gives massive control within any business is an understanding of your current cash position. So what's happening with your current cash flow statement? Because if you have a budget, that if you've fashioned a cash flow budget that gives you a certain profit outcome, and you can track that budget and perform as the budget predicts, then you know exactly what the outcome is going to be. So in other words, you're predicting what the future is at least 12 months in advance. If you, for some reason or other, are not tracking the budget and you are monitoring on a monthly basis, it gives you the opportunity to respond then and there to what's going on, to understand what the situation is, and to respond and put in place some tactics and strategies that might actually improve the eventual outcome of the budget if it was heading south compared to what you were hoping you were going to achieve. So you can take action then and there, rather than get to the end of the year and say, well, God, that was a pretty ordinary year, and it's too late at that stage. So the cash flow statement gives you a fantastic understanding of the here and now, and lets you be really proactive in terms of your decision making and tactical decisions that can be made right now to keep the business tracking in the direction that you want it to track. And I mean, we talk about farming being an unpredictable business, but how unpredictable do you think it's been for tourism businesses and those businesses recently with this COVID-19 situation? I mean, all of a sudden their landscape has completely changed. In fact, all businesses' landscapes completely changed. And so, one of the things I've been doing quite a bit over the last couple of months is looking at my cash flow statements and looking at my cash flow budgets and working out what are my strategies going forward to keep my businesses, and I'm involved in a number of them, keep my businesses functioning in a way that I actually want them to, and either minimize the downside of this current process with COVID-19, or other opportunities that I can capture that I'm not capturing now. So cash flow statements, incredibly important, all about the here and now, and where the business is currently situated. Cash flow statement, at the end of the year, you can generate a profit and loss statement. And the profit and loss statement is all about the efficiency of the business. So it's about how well the business is functioned to produce a return on the capital invested. After all, we're in business to make money. That's really what we're there for, to generate wealth for the owners. And we have capital invested in our businesses, and certainly from a farming perspective, if you're an owner, family farming situation, you generally have a lot of capital tied up in the land and the other assets of the farm. And so part of your responsibility as a business owner is to make a return on that capital. And so the profit and loss statement tells you about the efficiency with which the business is run, and the level of profit that's generated from the business. And tracking the profit and loss statement, even though it's a retrospective document, it captures the last 12 months of the performance of the business. If you're tracking profit and loss statements over a number of years, past history is a very good predictor of future performance. And so, pinning, unless something very drastic happens that changes the landscape, the likely scenario is that a business that's been generating significant and sustained profits over a number of years will likely continue to do that, because that's been the history of that business, and that is pretty much the case. And then finally, the third document, which is also generated from the cash flow statement, is the balance sheet. And the balance sheet really is all about the wealth of the business, the net worth of the owners, and what we're all looking to do over time is to increase our net worth, to increase the wealth of the owners of the business, and really in the end, the balance sheet is a great indication of how successful the business is at generating wealth, and also gives a very good understanding of the financial risk profile of the farming business as well. And so when you put the three of them together, an assessment of the liquidity given by the cash flow statement, an assessment of the efficiency of the operation given by the profit and loss statement, and an assessment of the wealth generation of the business in the balance sheet. When you put all those three together, that gives sound business practice.
Thanks, Greg. It's so important, as I understand, that all of these reports be used concurrently. I so often see small business owners and farmers, they might look at their balance sheet once a year when they have to do a review with their bank, but probably more than that, they look only at their profit and loss statement as it's presented to them, and they look at 1 year in isolation. Their profit and loss is telling them that they're making a good profit, but there's no money in the bank. And so would you mind just speaking to the interplay between these three key reports, and especially that one between actual cash position and reported profit?
Yeah, well, I think the first thing to say is that a lot of people, because they don't generate their own cash flow statement, profit and loss, and balance sheets, they rely on those that come back from their accountant. And the thing you've got to remember is the accountants produce your financial documents to ATO rules. They're produced for a purpose, and that is to, in most cases, to assess your taxable income. And your accountants will do what they need to do to make sure that you pay the amount of tax that you're required to pay, whatever that looks like. But they are generated in that fashion, and so there are a number of things or a number of processes that are used by accountants in the generation of those statements that actually bear no relationship to the real world. So, for example, in the profit and loss statement, if you're an owner of a farming business and you don't pay yourself a wage that's actually in your cash flow statement, you just work on drawings, then owner's remuneration is never accounted for. And yet it has to be, because the labour, for all businesses require labour, and labour is a legitimate cost of doing business. And so the amount of remuneration, a market rate for the owner and the owner's families, needs to be properly allocated in the profit and loss statement to get a true understanding of what the true costs of that business are. So that's the first thing. The second thing is that inventories, whilst most accountants' profit and loss statements will show a calculation of inventory change, so the starting and finishing inventories, generally the values that are used in those inventories are not market values. So if you're a self-replacing, if you have a self-replacing breeding herd or flock, generally the values, the book values for that are used for the livestock are natural increase values, which are incredibly low. I think nothing like, don't compare in any way to the market values. And even if you've been purchasing livestock, your book values might be higher than that afforded by natural increase, but they still often won't reflect the actual market value of that livestock. And so there's not the inventory change is not properly accounted for. And then finally, when we look at the balance sheets that are generated by the accountants, they're generally using a purchase cost or something for land or something along those lines, which could maybe years and years and years and years out of date. I mean, they're not working on current market values for the balance sheet, for the assets that are in the balance sheet. And so therefore they understate it. They often very much understate the asset, the true asset ownership or the true asset totals for the business because of that inability to reflect market value. And that's fine. I mean, those three statements generated by, the profit and loss and balance sheet generated by your accountant are generated for taxation purposes. So you actually need, I believe, as a sound farming business owner, you need three sets of statements. You need the set that are generated by your accountant for taxation purposes. You need your own cash flow statement, profit and loss, and balance sheet that actually give a true picture of the business. And then you need a farm benchmarking report, which actually gives you a really good understanding of where the opportunities and threats are within the current farming business. So three different sets of statements that are all generated for different purposes and therefore give a different understanding of the business.
Thanks, Greg. I mean, it's such a significant point, and to look at that a different way, if you are making decisions based on the reports that are provided to you for tax purposes from your accountant, I believe you're at risk of making some really unfounded and poor decisions. And so having those different sets of the same reports, one for your tax office and one for you to make management decisions, is just so important. And not looking at one in isolation, but looking at all three in combination, as you've outlined, is so important. I guess, and you've touched on this now, there's an opportunity once you've got those reports set up and being delivered and presented in a meaningful way, is then to do some really in-depth analysis on those reports to uncover that your KPIs or your key performance ratios are all trending in the right direction so that you can genuinely grow wealth long term. So let's touch on benchmarking, Greg. I know that when you've spent 35 years providing support around financial decision making for farming businesses, and you've spent all of that, as I understand, developing what is now a really sophisticated and significant benchmarking system that we use at Farm Owners with all of our clients. Would you mind just speaking to the importance of ratio analysis and benchmarking?
Well, I think one of the great things about farm benchmarking is that it gives you the opportunity to distill the numbers that you generate in your cash flow statement and profit and loss statement and balance sheet. It gives you the opportunity to distill those numbers down into a handful of really important indicators of the health of the business. And so the 17 that we use at Farm Owners Academy are outlined here, and they're broken up into 4 key areas. Solvency and resilience, which is all about the risk, the financial risk that the business is currently undertaking or currently finds itself in. Profitability, the ability or how well the business is running in terms of its ability to generate a return on capital invested. Financial efficiency, so that's really talks to the cost efficiency of the business, and then finally the repayment capacity, the ability of the business to be able to meet its recurrent financial commitments. Just understanding how to calculate those, and they all are quite simple to calculate once you've got those 3 statements together. But calculating those and having targets around what is required in each of those KPIs to be a high quality, successful farming business from a financial perspective allows you to really hone in on the areas of your business that might be a little bit lacking and really think about what needs to happen from a structural and strategic basis to improve the performance of those financial KPIs that perhaps are not quite as good as what they should be. And so it's one of the things about these KPIs is that very quickly, once you start to understand what they're about and understand the language of finance, you can very quickly look at any farming business, including your own, but any farming business, look at those ratios and have a really good understanding of the current situation of that business. And so it's a very, very simple thing to do. And in fact, there are 4 of them that really give you a very, very quick overview of the current situation of the business. And that is net profit percentage, the return on assets managed, equity percentage, and return on equity percentage. Those 4 KPIs on their own give a fantastic overview, a snapshot of the business. And when we think about it, net profit percentage is really telling you about the liquidity of the business. It's telling you how much of the income generated by the business is actually retained after all indirect and direct expenses are paid. The return on assets managed is telling you how efficiently the business is running. So how much of what sort of return on capital is being generated by the operations of the business. Equity is telling you about how much of the business the owners actually own and how much of it is debt funded. And return on equity is telling you how much what return is being generated by the owner to the owner's equity, and is it comparable with other forms of investment? Because really, in the end, if you've got money stumped up to own farming land and other assets within the farming business, livestock and plant and so forth, you could make the choice to invest that money somewhere else into some other form of investment vehicle and take the sort of long-term returns that you can get out of those investments. And so really it's a choice. And if your return on equity from your farm over a 5, 10, 15-year period is very low or very modest, which is the case with the majority of the Australian farming scene, then really, as the owner of the manager of capital, which is what you are when you own farming businesses, the manager of capital, you're doing yourself a disservice, because you actually should be thinking about, well, how can I invest my money, my capital, in a way that gives me the best return on that capital? And so that's a question that we should always be asking ourselves. And so if our farm businesses are not performing in a way that gives us a return on capital that is at least equivalent to the long-term average of the Australian share market or the long-term average of the Australian residential property market, which, as can be seen here, over the last 30 years, Australian shares have averaged 8.7% return on the money invested, and residential property 10.5%. If we look at the ABARE, Australian Bureau of Agricultural Resource Economics survey data, they do farm surveys every year, and they track the performance of Australian farms across the whole Australian farming sector over every year. Look at the performance of the average Australian farm over that same period of time. We can see that the average return has been 4.6%. That includes capital gain. So really, it's been a very, very poor second cousin in terms of an investment vehicle to the Australian share market and to the Australian residential property market. So really, we need, that's something that we need to be challenging ourselves. If we are managers of capital when we own farming business land, our farming land, and we should be expecting that we get the return on capital that is at least equivalent with what it would be if we were owning shares or residential property with that money instead of farming land and farming assets.
Greg, what becomes really clear to me as I hear you work through this is that if we're not looking at those 3 key reports and you're not benchmarking those against those 4 and 17 key ratios that you outline, it's a bit like being in the cockpit of an aeroplane with the dials painted in. You're just flying blind, aren't you, really? And it would be very difficult to make really strong and meaningful growth decisions without this optics or this visibility around these key ratios. Is that a fair comment?
Yeah, so I mean, having now owned and managed many businesses over my 40 years in business, and I'm currently involved in 6 businesses now, and I've owned a lot more in my life. I couldn't even think about how I could even be involved in a business without having a really clear understanding of what its current financial position and what its profitability is, and what the balance sheet looks like. I mean, to me they are just the fundamentals of business ownership. It's you are totally you are blind, as you said before. You are, if you don't understand the language of business, then you don't understand the business. If you don't understand the language of cricket, you don't understand the game. Yeah. And it's exactly the same with business.
Absolutely. You can arrive to day 3 of a cricket match and look at the scoreboard, and within a couple of minutes know exactly where that 5-day game is at, and sit down with your beer and your pie and be at peace with the game and lean in and get on with it. The benchmarking reports are really just your scorecard, aren't they?
They are. They're exactly right. They're a distillation of the performance of the business into a number of meaningful key KPIs that help you to focus in on the areas of the business that are doing well, and the areas that might need some attention. And that's really what they are. They're giving you a great vision of the business and its performance. And when you track KPIs over time, and KPIs, key performance indicators in all businesses fluctuate from year to year, because all business owners experience variability in what goes on in their business environment, and no different to farming. Farming experiences some pretty severe ones when we're talking about deep and long droughts and recessions in prices. But all businesses suffer from variability in their business environment, and so the business performance is not going to be a linear performance. It does jump around from year to year, but tracking the performance of those key indicators over a 5 to 7 year period in a farming business tends to give you a very good understanding of the business, because over that time frame you tend to get through the variability of season and markets starts to flatten out, and you start to see the trends that are behind the KPIs that you're generating. And it's the trends that actually give you a great insight into where the business is going.
So Greg, just to that point, within the Farm Owner Academy community, we've got clients that have been benchmarking now with you for well beyond 6 and 7 years, perhaps for 20. And there are some that are operating mixed farms in low rainfall areas that have had 13 years of consecutive profit, irrespective of season, and the ratios that they show are quite incredible for the way in which they've adapted their business models and their farming systems to drive risk out of their operation. Would you mind speaking to maybe just one or two of those examples?
Yeah, look, it's a great point that you make, Hutch. It's there's no doubt I've been working with some businesses now for nearly 30 years in terms of consecutive business benchmarking, and what it allows people to do when they really have a good understanding of this whole process, this whole financial management process around the cash flow statement, the profit and loss, and balance sheet, and then the generation of the KPIs that come from those three sheets. What it allows them to do is have a really great insight and understanding of their business, its strengths and weaknesses, and where it's at risk if in whatever eventuates. So whether it's a seasonal downturn or a price downturn, and they can be proactive around the way they manage what happens on farm, and be very responsive to what's going on in the marketplace and in their environment, to make sure that they achieve an outcome that is at least as good as it can be. I mean, in most farming businesses, there will be years where you'll either make small profit, break even, or make a loss, depending on how good your business acumen is. And farming, by its nature, is a low profit game. A really good performing farm business will average about 6% return on assets over a 10 or 15 year time horizon. So it's not a highly profitable game. And you compare that to other types of businesses where their profit performance will be somewhere between 15 and 25%. So very, very different scenario. So, and because of that, farms can't really afford to make significant losses. And so as a business owner, a business manager, when you're going through periods of significant downturn, either because of seasons or prices, your principal role as a manager is to make sure that you minimize the loss, minimize the downside, and then be able to capture as much of the upside as you possibly can when you have those years when the seasons are good and or prices are good at the same time. So it requires a lot of skillful management, not just doing the same thing year in, year out. And the skillful management comes when the financial impacts of all decisions that are made on the farm are totally understood. And that's what benchmarking, and it's what understanding the financial statements of the business give you. They give you great financial insight that help you to make far better decisions.
So Greg, I'm going to suggest that's a whole nother podcast conversation, because I believe in industry, and I'm keen to explore this further with you. There's such a focus on maximising profits in good years, whereas I think there has to be just as much focus on breaking even and minimising losses in those bad years. I'd love to have another conversation and extend some dialogue with you around that in more detail, perhaps as a follow-up to this one.
Sure, I totally agree. I mean, when you're looking at designing your farm business, it has to have the flexibility to cope with with variable seasons and variable pricing scenarios. And so many businesses that I have dealt with over the years, I've seen are not set up that way. So they do well when things are going well for them, but when things are not going well, when they have a drought or what have you, they lose massive amounts of money, and it can really, it can hurt the business. It can hit it really hard. In fact, in some cases, it can put it into a non-viable position. And that's really not what you want to, where you want to be as a farming business. And so understanding the risks and building in enterprise flexibility to mitigate against those downturns is really important. And as you say, that you referred, I think, to a low, one of the properties that had farms in a 320 mil average rainfall zone in South Australia. It's a wheat sheep property and has had sustained high profits now for 15 or so years, and and they've experienced droughts. They've been badly frosted. They've experienced all the things that everybody else has gone through, but their financial management skill is so high that they've been able to continue to manage the business in a way that actually continues to generate profit. And part of that process is that they have the flexibility of enterprise and flexibility of production built into their systems that enables them to do that.
Brilliant. Thanks, Greg. So a different question, Greg, for you. How long have you been developing the Farm Financial Framework program?
So I started, I think, developing the program about the teaching, the actual formal teaching program, I guess towards the start of last year, and it took me about, I guess, 5 or 6 months to put it together. It's a very comprehensive course. It comes with a booklet that actually gives a full description and working exercises for all of the online training that goes on. It's a distillation of everything that I've learned as a business owner around the issues of financial literacy and financial management. It's basic. It's the introductory course. The next part of that training is to then take that understanding and then start to use it to make good decisions, really good decisions, and that's an extension of the current course. But really, it's I think it's a very comprehensive course. It covers all of the aspects that people need to know about. How do you actually generate? How do you take a cash flow statement and generate the profit and loss and statements and balance sheets from there? It goes into the principles of double entry bookkeeping, and which was once double entry bookkeeping was once upon a time was just a standard understanding of shopkeepers and business owners, because we had to do it all manually. It's what we did as part of. And I've been in business long enough to have been operating long before computers became available. So double entry bookkeeping was a common practice, but so many people these days have no understanding of the background of double entry bookkeeping. Yet once you understand it, it's extremely simple. But so it's a course that I'm pretty proud of. It took quite a long time to write, and as I said, but I think it covers the whole gamut that you need to get really going down the language of business, and really gives a great foundation, I think, for people to move into more sophisticated financial management.
So, ladies and gents, I'm going to give an unashamed plug right now to this new edition or new version of the Farm Financial Framework that Farm Owners Academy and Greg are launching early July. I asked the question of you, Greg, at the start of this, where can you learn this stuff? And I grew up on a farm. I went through ag science and ag economics. I did an MBA with Elders after that, and worked in agri-business. And then I went into CBA and finance, and then got into consulting. And it wasn't until I got right on the other side of all of that experience that I actually got to sit with Keith Cunningham and learn how all of the theory and academic stuff actually practically applies to the businesses that I was actually involved in. I think what you've managed to do, and where most accountants and bank managers and advisors are too busy to stop and actually teach this, is you've condensed all of what we've talked about and so much more into a 14-week online self-paced program that not only shows people what to do, but you teach them how to calculate the ratios and set up these reports and get it absolutely right for their situation and their farms. And so, as I say, I'm giving an unashamed plug today to the Farm Financial Framework. I think it's some of, if not the best, financial literacy training available. Greg is live recording this program again. We've run it with our existing clients and got such good feedback that Greg's going to record this live from early July. It is a 14-week program. There are 5 in-depth modules to it. You get a full workbook that you get to work through. We're making this offer available. It's actually to the first 150. We're only going to have 150 people involved in this. And I guess given the seasons that a lot of people have had, fires and now coronavirus, this program, normally valued at $3,500, is being made available to all of you, or to 150 of you, if you like, for $1,000. So money back guarantee if you complete it and don't get value, and also 2 tickets to the Farm Owner Academy 2-day conference called the Top Producers Program. And those tickets are valued at $995 each. So significant value for $1,000. If this interests you, and if you'd like to learn comprehensively around all of the topics that Greg has touched on today, jump onto www.farmownersacademy.com/farm financial framework. So that is www.farmownersacademy.com/farm financial framework. I do, as I say, believe this is the best training that you can get. It's completely applied. Your farm will be comprehensively benchmarked and debriefed. It's a wonderful program. And perhaps while we are at home after sowing, with our families navigating social isolation, July, August, September, and being part of this live program could be a wonderful focus point for you as a farming family to really get control of the financials of your business, and to set the foundations for real growth going forward. So Greg, that's my unashamed plug. Did you have anything else to add there to, I guess, an explanation around that program?
Yeah, I think as part of the teaching as well, Hutch, we actually will generate a farm financial benchmark for you as well. So we'll get you to send in your current profit loss statement from your accountant. We'll get you to fill in a very short questionnaire, which just gives us a bit more information around the owner labour and the assets the market value of the assets that you're using, and the inventories, the various inventories on your farm, so that we can allow us to generate a farm financial benchmark for you, and then that will be provided to you as well. So even if nothing else comes out of the course for you, you'll get this farm financial framework report, which is a great snapshot of the current financial health of the business based on the profit and loss statement that you send to us, and the answers to the questionnaire that we send out. So just that alone is incredibly valuable. Let alone the Top Producers Program. It's such a great event, that Top Producers Program. You learn so much about what's what can be put in place to run successful farm businesses, and potentially to move your business to a freedom farm, or a farm that can run without you. And that's all covered in the Top Producers Program. So I think it's an amazing value, really. And I love business. It's a passion of mine. I love talking about business. I love reading about business. I love analysing businesses. Is what I spend most of my time doing these days. And so perhaps I'm a bit weird in that regard. But I do think that the course, the Farm Financial Framework course, as I say, it's a distillation of everything that I've learned over 40 years in business.
Thanks, Greg. I feel very privileged to be part of the Farm Owners team, and to have access to someone like yourself who's put so much time and energy into creating analysis tools like the benchmarking system and methods that support the success of farming families across Australia. So thank you for the time and the energy and the effort that you have put into all of this and the infrastructure that supports this program.
Thanks, Jeremy. I appreciate the opportunity to talk, and hopefully that's been of benefit to those people who are listening.
Yep. So ladies and gents, if you want to go further on this whole topic of financial literacy, jump onto farmownersacademy.com/farm financial framework. We'd love to have you part of this program. It kicks off early July. Details are on the website, and reach out to support@farmownersacademy.com if you have other questions. Greg, thanks sincerely again for your time. It's been wonderful to scratch the surface on this conversation, and look forward to getting underway in that program with you in a few months' time.
Thanks, Hutch. Bye, everyone.
Bye, everyone.